Hey everyone, Luca here with a special collaboration with you with the man himself, Cantonese Cat. How are you, man?
I'm doing okay. Hey, Luca, always happy to talk to you about market and everything else. It's always been a great collaboration. Thank you for having me on again.
Thanks for coming by. Our risk on thesis seems to be playing out beautifully. We've seen Ethereum making new cycle highs today, and a lot of other stocks also performing really good. So, what are your thoughts on that? I see you
Yeah,
have Coinbase here.
yeah, I have Coinbase chart being pulled up, and I think it's kind of very interesting. There are a few things I definitely wanted to touch base with you. First thing is Coinbase has run very hot since March, all the way to July. It basically went from like something ridiculous, like in the 140s all the way up to the 400s, like 440s, and it's been running hot for months and months and months. And people got kind of euphoric about it. And the next thing you know, you just have a correction. And this is like a completely normal expected correction after you've gone on hot for months and the volume isn't even that great. So a lot of people got really like scared and they're looking at other plays, which we'll talk a little bit about, on the other on the other stocks. But basically it's just hit an area and it just decided to retrace back to like the zero point 0.5 fib, like it's like around 293. And this is
Yeah.
really nothing unusual after a stock has kind of ran up real hot and just kind of retraced back to cool down. Like this is a very, volatile stock. So there's really nothing to get that concerned. I want you to remember the number 293 because there are a few things that kind of popped up there as well, in addition to the zero point 0.5, fib there. The other thing was you also follow the bull market support band. You also see that it's been holding for our support band right there on the top of it. Can it dip down below further? It could, but it doesn't have to. It end up having a nice breakout and doing a very nice back test there. So that's another confluent area where it could be holding. The third reason is we also use this tool, called Ichimoku Cloud Analysis. And it's basically a way to calculate different resistance and support levels based on almost like a moving period average. I'm not going to get into like the deep math of that, but it gives a very clear level of like support and resistance a lot of times. And it's just basically touching the baseline or the kitchen there perfectly here on the weekly chart. On the higher time frame, you look at the monthly, it was touching the conversion or the Tenkan line over there perfectly. That serves as another confluent area. You see how sometimes when bull market happens, it pushes through up above real far, real fast away from the Tenkan line here, just kind of touch it, and then it goes higher. Here it kind of touched over there too, and it goes higher. I think we're just kind of back testing that zone from multiple things that we're looking at. And it's basically holding that very well. Another thing to also look at too is just to add more confluence. You know how sometimes I use GAN, which is just a way to use the 45-degree angle and also add some additional Fibonacci tools to analyze the stock and I usually look at, the bottom number. I usually do like a multiple of 45, which 360 is a good number. And then for the ratio, I can use 2, which has given me some really remarkable market symmetry here. As you can see that these arcs and angles here really look like they do mean something, like big breakout, rejection, back test, breakout, back test, breakout, back test, unable to hold, held the angle there and went up to the next level. Here, we basically are just pushing up to the level above and wasn't able to break above, and we just basically back test again, arc right here at the bottom where we got rejected over there. There's really nothing like bad about the whole market symmetry. If you look at all these different things, it just seems like 293 around the area is a very, very important area here. I also want to point out one more thing. This is called the anchored volume weighted average price. This is a lot of things that a lot of people use as a tool. So you just basically pick a pivot point here. I'm going to pick a pivot point right there for you. And this basically means that whoever ends up buying the stock here, if the price is above that, that means that majority of people are still in profit, and the price is below that, that means a lot of people are kind of underwater and maybe looking to sell. So this can serve as some pretty decent support and resistance level, and it's like right there, you know. I see just like multiple support levels here to make me feel pretty confident. I think this is just a back test of a very hot stock. And I don't think there's anything really fundamentally wrong with the stock, even though earnings have been, you know, like disappointing for some from the revenue side. I think EPS was like blowing out the water. But anyway, it's a very volatile stock even in terms of revenue because it's depends on crypto. What do you think, Luca?
I definitely agree with that. I think it is a bullish backtest. Stocks do this all the time. I don't think this is something to be all that worried about. And as for the fundamentals, as I'll share in just a couple of minutes, I think they're looking amazing and they are very likely to keep improving over the next couple of weeks because of, well, the fact that we're nearing the cycle top. And generally, what happens is that we have a tailwind coming from higher transaction fees as there are more retail investors who pile into the party and do all of these things. First, there are more retail investors, so of course you're going to have more transaction fees. And also, leverage plays a major role in shaping the overall revenue for Coinbase, I believe, because the more leverage investors use, the more revenue exchanges make. And generally, what happens is that as we near the cycle top, we have more leverage that is being used by a lot of people who try to catch up with those who held until that point and all the uncertainty, all the anxiety, and so forth. And that's generally what happens. And that acts as a very strong tailwind for Coinbase's and other exchanges' revenue.
I agree. I mean, they have perpetual contracts. They have all kinds of, financial tools that are available for retail traders, really. Honestly, if you want to trade altcoins in the United States, where else are you gonna go? I mean, I
Yeah.
don't like Robinhood, but there's such like a limited amount of coins that are available. Like they keep listing them, but you're just not going to get like the weirdest and the hottest things that are like behind the scene. There are going to be people who are who look for that like 50 or 100x gain during altcoin season that you might not be able to do on Robinhood. Yeah. Yeah, what do you think about the revenue? Like the number dropping, like is it meaningless? Is it just like normal volatility for such a volatile business like Coinbase? I don't know what to make of it. The street seems to
Well,
care about revenue, but yeah, go ahead.
Well, I think the revenue is, of course, very volatile. It's a volatile business, and this is also reflected in the price action. You can't really have a stock that goes up 300% without having any meaningful corrections,
Yeah.
right?
Yeah.
That's how much Coinbase run up since early April,
Yeah.
about, well, a lot.
Yeah.
So I think that this retracement, purely from a technical standpoint, is completely normal, and I don't think it's something to be worried about. As for the revenue, I expect it to increase, and I think this is just a seasonal thing,
Yeah.
and that it is not going to continue this way
Yeah.
moving forward.
I have a hard time believe that with Ethereum running hot right now, the revenue is not going to increase.
I
But
agree.
yeah. Well, I mean, speaking of, and I guess one last thing here, like people ask about targets and things like that. I just want to kind of put into context. I don't really do absolute price targets because it's kind of pointless to do. It really ultimately depends on how much liquidity is being pumped in the system and when the party ends up, stopping based on liquidity, drying up, right? So it's kind of pointless to talk about that. With that said, also want to kind of put into context here too, in terms of how hard it has ran from 2023 all the way up to the top in December 2024. It basically went from like 30 bucks, ran all the way up to around 350, right? So this is a 11, 12x stock that happened for a period of just 2 years, and it's been correcting sideways here for about a year and a half. I think that there is still a lot more potential gains for this to go, depending on how much liquidity in the system and when the cycle is over. I do think that if it's able to break about the 0.86 over here, which again is kind of dipping below there a little bit, it's not the greatest thing to see, but it's still kind of hovering around the area. It's just basically backtesting this, liquidity zone over here from the past. So it's able to hold this area and reclaim the 0.86. I think some of the higher targets are possible. I don't want to be like crazy and say, oh, it's going to hit like four digits or anything. We're going to take one level at a time. I think we need to break above the previous all-time high here from the IPO before talking about higher levels. But I think that it's possible to to look at that. And currently, the risk reward ratio still skews towards reward to me, based on looking at this. So
Yeah, I
yeah,
agree with that. Though I personally tend to be more conservative,
yeah,
as I'll share in just a couple of minutes. My targets are lower than that, but I definitely agree with you that the
yeah.
risk reward setup is currently definitely leading in favor of the buyers here.
Yeah, I'm probably a little bit more like optimist to a fault, which is good to actually counterbalance with you. But it's important to know that, you know, from here going up there, like you're talking about Coinbase getting a Wells notice over here, you know, and they still end up making a big move over here, whereas now we have a major correction. I tend to be a little bit more optimistic, but we'll see. Let's talk about Ethereum, shall we?
Let's do it.
Yeah, it's been running hot. I have this like stupid chart here where I changed the angry faces to smiley faces now because I initially it seems like every single cycle I was looking at it there was a trend line over here. It looks like it was going to form like an ascending triangle and just keep pushing up higher, but it ended up having like a rug pull over here in 2016. It ended up having a rug pull over here in like during COVID times. You grab some liquidity down below. And then recently, we have a very, very nice trend line that's been holding for like almost 2.5, 3 years, and it broke down underneath of that. And a lot of people got really extremely bitter and just kind of capitulated, and they would give up on Ethereum, Ethereum's dead and whatnot. Obviously, it formed like a nice cup in hand that just broke back above. So there's really nothing unusual about what's happening now compared to the previous cycle before the run up, with some, final stop loss being taken, final, leverage being taken out. And Ethereum got transferred from, weak hands to strong hands, and now it looks like we are, like you were going to talk about in a second, we're going to basically make a cycle high so far. And we've already done that. So higher high over here, I can't really be that, upset about where Ethereum is going. And this is basically a very, very similar setup before, a very nice run that can last for months, for Ethereum. How high it goes, I think is debatable. I don't really want to, be like Mooncat or anything, but I just think that it's a pretty good setup here for Ethereum to make all-time highs and potentially even get to like the five figures. I think it's entirely possible, for something like that to happen. And on top of that, right now, if we end up closing let's see, if we end up closing the weekly here, on Sunday above the 0.86, I think it would be the first time this cycle that has done that. And that would be a change of character. That would be a true breakout for it to go
Yeah.
higher. Once it breaks the 0.86 lock fib, generally it opens up doors for some of the higher targets up here above. So that's kind of what I'm looking at for Ethereum. I don't know how hard and how long this is going to run. I don't think anybody really knows that. But yeah, like the breakout, the setup, everything looks beautiful is happening. I don't think it necessarily have to back test this trend line over here. It didn't really do that before, and we back tested 0.786 here almost perfectly. And that was like a good sign that, hey, I think we're ready. And that's what's happening, Luca, I think. What are your thoughts, man?
No, I definitely agree with you. And I think that Ethereum is primed for growth. I've said this since early April when a lot of people were capitulating. I believe that Ethereum will continue to outperform a lot of altcoins, even, and of course Bitcoin as we move deeper into this risk-on environment. Because what happens generally is that as we near deeper into a risk-on environment that generally tends to precede cycle top formations, we have a rotation towards risk assets. Because we cannot really have a cycle top formation without having a very elevated risk appetite. Because the way it works, we have a very high risk appetite in the markets, which leads and allows market makers to distribute and leads to the distribution phase, which leads to the actual cycle top formation. That's generally what happens. And this kind of risk on environment primes altcoins and Ethereum a lot.
Yeah, I mean, I think, now we're going through a cycle, or the part of the cycle where you are starting to get a little bit more worried about distribution. Because if Bitcoin dominance is not going up anymore, um, then I think all assets can still go up. Bitcoin is probably still going to keep going up, but I think this might be the start of what you are looking at in terms of what could be more of like a distributed phase for crypto in general when things start to go up, right?
Yeah, I agree. I don't think we're in the distribution phase right now. I'm tracking some key indicators we've discussed
Hmm.
in prior collaborations as well, which
Yeah.
still haven't flashed yet.
Hmm.
But definitely, it's good to keep in the back of the mind that this is where this environment leads to, and
Yeah.
it's a reality we have to accept. But
Yeah.
of course, we can make a lot of money before that.
Yeah. And I think it's one thing that is very important to keep in mind that I'm looking at this chart here. This is the Ethereum dominance, basically a percentage of Ethereum as a percentage of the overall cryptocurrency market cap. And the term Ethereum dominance was like a joke, whenever it gets down to like 7%, it was just extremely brutal. Like this big giant parabolic downtrend has been broken. Technically, it has changed the character completely. And it's making a V-shaped recovery. Right now, we are reclaiming a lot of these different technical levels over here, including the Ichimoku, Tenkan Nikishin, had a bullish cross over here. You had a lot of these like, false crosses over here, but this is like a true bullish cross over here. The Ichimoku cloud is going to be resistance, but right now we're breaking inside the cloud here with more or less like a Marubasu candle, which doesn't really have any wick above or below. Like this looks like it wants to just have further bullish continuation here. Kind of like it did over here, it will say I want to have some further bullish continuation over here, and so far it's playing out. A lot of the technicals are saying I think Ethereum dominance is gonna keep on popping up here when Bitcoin is just taking a breather. So I'm feeling pretty good about just holding Ethereum. I don't think there's any concern that I have here. Do you have any thoughts over like, how are you thinking about Ethereum compared to other plays? Specifically, Luca, I want to ask you about something here. We didn't really talk about this before. You know how the hot plays right now are Ethereum treasuries. I want to hear your thoughts about that.
I think that all treasuries will perform great in the next couple of weeks and months because they're a risk asset, right? Every risk asset performs really good in a risk on environment.
Yeah.
And I mean, I think they'll perform great for those that are willing to take the risk of investing in them and are able to stomach the volatility. Great. I mean, you can make a lot of money off of them. But for me personally, due to the fact that I have a lower risk tolerance and the
Hmm.
lower risk appetite as well, I'm not going to invest in them because
Yeah.
I think that number one thing that you should have as an investor is a very high correlation between your personal preferences and your investment strategy. Based on objective analysis, I think that treasuries will go up a lot.
Hmm.
But if I correlate them with my personal preferences, they don't really match.
Yeah.
And that generally tends to lead to a lot of emotional mistakes. And when you see the volatility on the stock and you find out that you're not able to stomach it, that's where emotional mistakes tend to occur.
I think that's a very beautiful way to put it. I actually made a post on X basically saying the same thing. I think these Ethereum treasuries, fundamentally, I just have a hard time seeing them not doing well, but I cannot chart them necessarily. Like Ethereum, I can chart it. It has a cycle top, it has a cycle bottom, it has trend lines, it has fit levels from cycle top to bottom. I can see what it's doing. And because of that, I sleep a lot better at night. Like I know more or less how the asset's going to behave, which is, not anything that is going to be too entirely surprising to me. I'm not using my retirement funds to try to, get into these leverage plays, but I think a lot of times people are kind of doing these really, really high risk things they're kind of dangerous. For example, like a play like SharpLink Gaming or SBAT, it became an Ethereum treasury, I think around like May of this year, just a few months ago. I don't have any like cycle high or cycle bottom here to like chart. I don't know what the FIB levels are. I don't know like if as a chartist, I just have a hard time really wrapping my head around it. It looked like it was overextended, it looked like it was going to fill the gap, and then it's just been kind of going sideways, forming a consolidation over here. It's probably going to do well because the trend is changing. The 20-month moving average is, 20-month moving average is like serving as support. Is probably going to keep doing very well. But like, how high would this thing go? When are they going to end up having dilution? They're trying to increase that to buy more Ethereum. Is it's are there any like company specific risk, things like that? I just don't know enough about that. Same thing with, a big name like BMNR, which is backed by, like Peter Thiel and Cathie Woods and, Tom Lee. These are great names out there. And it's looking like it's forming a bull trend, like 20-month moving average is going up, is holding the upper Bollinger Band. It's not overextended like it was back in July. So I think it's probably going to end up doing well. But like, I don't have a cycle, like I don't have any fit levels for you. If you're gonna ask me to chart this, like I don't know how to chart this. Like that's not something that I'm able to give you like precise price targets and things like that. And because it's such a weird price history in the past, like sometimes these things get taken into account from algorithms and things like that. So a lot of these like Ichimoku Cloud, a lot of these other like indicators, they just look really weird. And it looks like there's like resistance up here around the 80s. There's resistance here in the cloud. Like I can't really give like a good analysis. I would rather just kind of stick with Ethereum and be okay with not getting those crazy gains while suffering from these crazy volatilities too, based on my emotions. I completely agree with you.
Now moving to my screen here, I have in one of my valuation reports I shared for the Patreon members, we have the business and strategy flash for Coinbase. And the reason why I said that moving deeper into this risk on environment and moving closer to the cycle top will act as a direct tailwind for Coinbase's revenue is that 70% of their revenue stems from spot and derivatives trading across retail and institutional accounts, mainly retail. So if we have more retail that comes into the party that trades altcoins, if we have higher leverage that they're trading with, it will act as a very strong tailwind for Coinbase. And I think that this will be really bullish moving forward. And also the prime brokerage, which of course we all know about the Genius Act, how that will impact Coinbase because every institution will use Coinbase Prime to get access to crypto. And I think it's amazing and it will have a very positive impact over the price action in the coming weeks and months.
Yeah, and a lot of times people just kind of focus on the price action and what happened over the last few weeks, especially when they see earnings and the reaction from earnings. They think like there's something wrong with the fundamentals. And the reality is like no, So you have to do a little bit of a deeper dive in terms of why the market has the reaction to the earnings when there's clearly a very, very profitable strategy that, Coinbase is having right now based on what's happening from the, macroeconomic side and from the crypto side. So yeah, this is great.
And I want to share something here for Ethereum. Now, Ethereum has pulled back right into the 0.236 and 0.32 Fibonacci range after rejecting off of this high time frame resistance range, which I believe is completely normal considering the amount of times it has acted as a local top all throughout 2024. And now it has broken above it, which I consider to be a sign of strength. And moving forward, we might get a pullback back into this high time frame resistance range, which I believe will now act as a strong reversal point and potentially setting up for a continuation to the upside. And I have something very interesting to share here, which is the Solana to Ethereum pair, which is something I want to hear your thoughts on as well. To add a bit of context, I believe that the altcoin market has completely shifted to what it used to be back in 2017 or back in 2021, when we mainly saw everything pump, right? Everything was just pumping. You didn't really have to do any analysis because if you were into an altcoin, it would have just pumped. Now, however, because we have been in a quantitative tightening environment and because the crypto market itself is maturing as an asset class overall, I believe that the altcoin market has shifted. And now we're no longer going to have all sectors performing really good in the same time, but instead we're going to have rotations from one sector to another. And we've seen something very interesting, which happened to the Solana to ETH pair, which is that over the last couple of years, Solana outperformed by a large, large margin. And now we've seen Ethereum outperforming while Solana has underperformed. And I think that this is a clear indication of how liquidity rotates inside the altcoin market. Moving forward, I expect that Ethereum and utility coins are very likely to keep outperforming, though in the short term, more nearing this high time frame support range, which in the past has acted as a major reversal point for the Solana to ETH pair. And now I expect that once we'll test it, we could have some sort of rebound higher, maybe punishing those who have entered late in Ethereum, right? Because it has formed new cycle highs. Everybody is excited about it. Everybody buys into it. So maybe we could have some sort of fake out like that to punish everyone who has entered the highs. It would also coincide with a backtest of the prior high time frame resistance range for Ethereum. And that's where I believe a continuation to the downside for the Solana to ETH pair could occur. What are your thoughts on this?
Yeah, I've always thought that Solana had ran too hot, too fast during the early part of the cycle from a couple of years ago. And it's really of no surprise when somebody said that Solana is dead around like $8. Th that was kind of like the maximum point of opportunity, right? Not when it's like in the 200s. It's ran too hot, too fast. There is clearly a rotation that's happening. With that said, I also don't want to have other people think that we don't think like Solana is going to go up. Solana's probably is going to go up. I think
Of
that
course, yeah,
yeah, it's not that Solana's not going to do well. It's just Solana's going to lag behind Ethereum because it's
Ethereum.
probably
Yep,
time for, like you said, Ethereum and other utility coins to go up. Matter of fact, it's not just Ethereum. Like if you look at what's stronger right now, you're looking at like XRP, XBAR, Chainlink has been showing strength, right? So
yep,
yeah, you're really looking at a lot of these, older utility coins that are trying to play catch up when Solana is doing absolutely nothing. So rotation is clearly happening right now, and I do agree with you in terms of what you're seeing is Solana is probably not going to be like the darling of the cycle anymore. He's already made a very huge gain from early in the cycle. Now, with that said, I think that a lot of these Solana linked meme coins, like you said, from our earlier conversation, they may not be the darling of the remainder of the cycle. It doesn't necessarily mean that meme coins are dead because you also have things that, like the number one meme coin, Dogecoin, hasn't really ran quite just yet and actually is showing some strength recently. So you might end up kind of rotating away from the Solana ecosystem to other ecosystem. So utility coin is an opportunity, but also like, some of the more traditional, first generation meme coins might be playing some catch up here as well, just as a part of rotation. That's kind of what I'm thinking.
yep. I agree. I mean, there are a lot of people who misjudge, the underperformance side to something being dead. I mean, something underperforming doesn't mean that thing is dead. It just means it will lag some other assets, and that other assets are better opportunities.
Yeah, just like that Bob Dylan song, times it's times they are a changing, like whatever's first will later be last, and it's just the way that the cycle goes. Unless if you're investing or trading like a really bad asset like Luna or something, then there's not going
Yeah.
to be a rotation to those. But overall, like these, as the overall assets is maturing. Things like Chainlink is not going away. Things like Solana is not going away. Things like Dogecoin is not going away. Ethereum is not going away. And I think things are just XRP is not going away. I think they're just going to keep on rotating from one thing to another, depending on our sentiment, depending on where the liquidity is, maximal in terms of profitability for the smart traders. And the smart traders are seeing an opportunity with Ethereum, and they've been seeing that for a long time based on this chart. So.
Yep. I agree. And one last thing I want to share here is the Bitcoin dominance. Now, we've seen something really interesting happening with Bitcoin dominance, which is that over the last couple of days, we have been consolidating right around this high time frame support range, which in the past, back in November, has acted as a reversal point. We led to that mini alt season we've seen in December, and then it has acted as a strong support point once Bitcoin was going down and all of those fears around the potential of a cycle top. This was, in fact, what kept me on the bullish side because the Bitcoin dominance wasn't going lower. So it suggested that there wasn't any rotation or distribution happening away from Bitcoin, and that the most likely outcome was for Bitcoin to keep forming new cycle highs. And a couple of weeks ago, it tested it, it acted as a strong support point, but now it seems like we're seeing a breakdown from this range. And I think that this is an indication on something I've said for many weeks now, which is that altcoins will outperform. As we move deeper into this risk on environment and as we move closer to the cycle top, this is a reality. Risk assets outperform. Because as I've said earlier, I believe that as we move closer to the cycle top, we will have an increasing risk appetite that actually leads to the distribution range and later on to the cycle top. And tracking the Bitcoin events has really helped me to assess the broader cycle. And moving forward, as the Bitcoin events will keep grinding lower, my overall approach will shift towards a more conservative one. However, that will not happen until we have clear bottoming signs on the Bitcoin dominance. So that means something very interesting. If we look at what happened back in 2021, and if we correlate it with Bitcoin, when the distribution phase was happening, as you guys can see here, while the price was inside this high time frame distribution range, the Bitcoin events was going a lot lower. But the downtrend and the pullback didn't really happen until the Bitcoin dominance bottomed out. And we had these signs of a bottoming formation, that the trend was weakening in the Bitcoin dominance, and that the distribution was complete. Because that's basically what the bottoming of the Bitcoin dominance means. It means that the distribution is complete. It means that there isn't more liquidity to get taken out of Bitcoin into altcoins. That's generally when it's time to take some profits, the risk, and take a more conservative approach. So I won't flip towards a very cautious approach in terms of hedging or in terms of de-risking a lot of my spot holdings until we have clear bottoming formation for the Bitcoin dominance. So tracking the December lows will first of all be important, because once we'll reach these levels, this will be an important range for the Bitcoin dominance. And then maybe we could go lower for the Bitcoin events. Maybe we could test some of these levels. I don't know if we'll reach them, but it is a possibility. The range high from the consolidation range back in the bear market, this could be the final support range for the Bitcoin events. And once we'll test this, if we do it all, that's where I would consider completely de-risking out of my positions and taking a very cautious approach for the overall cycle. What are your thoughts on this?
I actually have more of a question for you than thoughts. Because
All right.
I think that there is uh I think there's a change of behavior. I think Bitcoin dominance looks like it's, gonna keep going down. I think it might be a little bit controversial because it's been just going up nonstop for like 2, 3 years. But I think we might be at an inflection point that we are reversing this, and I think that we are entering a more risk on environment as we're seeing on charts like Coinbase and Ethereum, which aligns with that idea. Now, the question I have for you is this. Whenever you have Bitcoin dominance dropping at this point in the cycle in the past, usually the risk on environment comes on, right? Now, looking at the past cycles, or the last cycle, Bitcoin dominance really peaked around like January of 2021, and it kept dropping for really significantly for about 5 or 6 months all the way to like May. So that took about 5 months for that to happen. Now, that was not the cycle top necessarily. You still have a lot of kind of this like leftover extra liquidity pump, that happened all the way to really towards the end of the year, right? So that phase, and Bitcoin also made an all-time high around, November of 2021, which is really about 11 months from the peak of that Bitcoin dominance of that cycle, right? So right now, if this is the start of the drop of the Bitcoin dominance, and assuming that this rotation takes time, and since the 4 year cycle is almost coming to an end, I want to hear your thoughts about what you think about the 4 year cycle, and whether or not we might have some legs to move forward. We talked a little bit about that, but we had a little bit of like a offline discussion. I kind of want to continue on hearing your thoughts on that.
Yeah, so I think that the best approach is to remain flexible, right? As long as the 4 year cycle is not invalidated, it is still on. in my opinion. And assuming that this time is different, in the past has been really dangerous.
Yeah.
So I think that moving forward, the best approach is to keep this in the back of the mind, right? That this phase will eventually lead to the cycle top. Do not take a stance that is too cautious or too conservative or bearish for the matter until we have clear signs that the distribution phase is very close to being over and that the markets are ready to roll over. Right now, we're approaching a phase where a very strong narrative will emerge, which is the end of quantitative tightening and rate cuts. There is an 88% probability that we'll have a rate cut in September. So the markets generally what do is they start to price in things before they happen. So they perform based on the perceived reality of things. They don't really perform based on objective fundamentals. What we've seen all throughout early 2025 was all based on speculation. And that's really what markets do. I believe that as long as we have the potential of a bullish narrative, the most likely outcome is to continue going up. But when we run out of narratives, generally what happens is that the markets tend to roll over. Think about what happened back in December. We had perfection being priced in. We had high growth being priced in. We had a great economy being priced in. We had Trump getting priced in and the US strategic reserve for Bitcoin and the 2017 fractal for the DXY and for the dollar and for the overall economy. We had everything priced in, right? We ran out of bullish narratives. So the markets roll over and they start to price in the next one, which were tariffs. And then once tariffs got priced in, when everybody was aware of tariffs, when everybody was, fearful of these tariffs, we ran out of bearish narratives. And then the market started to price in the next thing, which were deals, which were positivity, and so forth. And that's what I think the markets perform based on. Right now we have a lot of narratives that are still not priced in. So for that reason, I believe that the most likely outcome in the next couple of weeks is to keep going higher, both Bitcoin as well as altcoins, and that when we'll enter this phase of euphoria, that's where a good decision will be to take a more conservative approach. Not necessarily bearish, not necessarily sell everything, because that's generally how you get sidelined and you make emotional mistakes. But take a more conservative approach and be ready, prepared. Flexibility, in my opinion, is the most important asset that you could have as an investor. Being able to adapt yourself quickly to new market circumstances is one of the most important things that I believe you should have as an investor. And being ready for events, because the markets always take you off guard. So there is predictability and unpredictability. You can prepare yourself for the moment you'll eventually be wrong. And that's how I view the markets. And for the 4 year cycle, I think that, well, once again, it's a level by level market and it should be treated as such. For now, I think the 4 year cycle is on, but maybe once we'll reach that phase, if we have sufficient bullish confluences and potential bullish narratives and good and strong fundamentals, so the economy doesn't roll over and we don't have a recession and the labor market remains strong, and maybe the Fed can actually pull off a soft landing, maybe we could have that changing. But until then, I think that the most likely outcome is to have a 4 year cycle.
That's a completely fair assessment. Um, I think your point on the fact that, well, not the fact, we don't know, we're thinking that over the next few weeks is going to be, likely risk on based on the momentum that we've been having. And it's kind of one of those things that when we were watching X, people are saying about seasonality. They think August, September is technically traditionally a weaker part of the market. And I was kind of looking at everything. I was like, I'm not so sure about that. The reason why is traditionally March and April were, supposed to be strong, but we had like a big giant crash. I mean, Nasdaq dropped more than 20%, S&P 500 dropped more than 20% within a very, very short period of time to price in the tariff risks. And that really threw seasonality off completely. Can you imagine if you sold in May? Like the saying is supposed to be like you
Well,
sell in May and go away. That would
yeah.
have been a tragic mistake, you know?
Well, I
Um,
don't necessarily agree that seasonality was thrown away. I think it played out perfectly.
I would like to hear your
I
thoughts.
mean, if
Yeah.
you look at what
Yeah.
happened in post-halving years, yeah, if you look at what happened in post-halving years, they have all been bullish in the third quarter.
Mm,
And
mm,
we're currently in a post-halving year. So I think that seasonality played out perfectly, but I don't think that people were looking at the right thing. And
yeah.
I think that that served as a narrative to keep people on the sideline. All
Yeah.
of those narratives or selling may go away and things like that kept people on the sideline and kept them waiting for a deeper pullback, which never came.
Yeah. I mean, that's why we like to, I mean, like, to me, I just think that it just seems like people are talking a little bit about too much that most likely won't become true. But from your perspective, you're coming more from like a qualitative, seasonality perspective. Like that's probably, I hope I can give you a stronger voice, man. Just saying. I mean, I think that was a great perspective to actually look at granular, where seasonality based on cycle rather than just averaging all the years and just kind of come up with like a more generic conclusion. If that's the case, then great. I mean, things still seem to fit the cycle. I think we should stay cautious, and I think that the thought about, staying flexible is good. The only thing that I have to say about it is that this cycle is different because if we are having the liquidity coming in, I'm still very, very surprised. Like IWM, which is the Russell 2000, which is the small caps, which is the most, like risk on indicator that I usually look at, still hasn't formed all-time highs at this point of the cycle. Like that's a little bit unusual to me. So I am not gonna say like, the 4-year cycle is invalidated because I don't know that. And I think that it's good to continue to have these conversations, look at the trend, look at liquidity, look at the macro, and just keep having these conversations over the next few months and see where we are, Luca. What do you think?
I agree, man. No, man, it's definitely great. And I think we balance each other out.
Yeah, no, I think so too. We should keep doing it.
All right, man. See you next time.
All
Thank
right,
you
take
for coming
care.
by. And
Yep.
I hope you have an amazing day moving forward.
You too. Take care.
All right, man. See
Yep.
you.